By now, I want to believe that each and every one of you has no problem in identifying engineering liquidity. We covered deep into that on the previous session about engineering liquidity, a deep dive in it. And so in this session, we'll be covering about a sweep of that engineering liquidity. If you clearly remember in whatever session that I said before, that the engineering liquidity, just like the inducement, is a core liquidity, meaning price may just grab that engineering liquidity and give the ultimate reversal towards the external liquidity. Yeah, so, and I said, of course, just a quick recap, that engineering liquidity is the liquidity resting below the valid pullback right before the extreme PY. I mean, now in this case, if you are like bullish, that is when now you will be looking at the below the low. But if you are bearish, of course, it will be above the high because it's a pullback window, and we know that when you're bearish, we obviously consider the buy side liquidity, and if you are bullish, we'll be considering the sell side liquidity. So that now makes sense when I say that if the liquidity resting, I mean now in a bullish scenario, like in this chart that is card JPY. Yeah, you can see we are in a bullish scenario. I have identified the trading range and all is perfect there. So if I am to identify the engineering liquidity in that chart, I'll be looking at the valid pullback that is right before the extreme PY. And now the engineering liquidity will now be the liquidity or the sell side liquidity resting below that valid pullback that is right before the extreme PY. So right here on this chart, this is card JPY. You can clearly see that price has taken out this inducement exactly right here, and this here is a major inducement. So price has taken out the major inducement, and then after that we all know what this one here is obviously confirmed to be a swing point, and then this one here also. So this one here is a swing point right after price has, let me change the color. So right after price has taken out the inducement, we say it doesn't matter if it's major or minor. This one here is already a confirmed swing point, and so if price now, whatever, it doesn't matter now how much further price goes taking this sell side liquidity, as long as like it has taken out the first, this one here is already confirmed as a swing point, and now we'll be waiting for a reversal, or we'll be waiting for price to reverse and break past the swing point to confirm that bullish breakout structure. And that's the, you can see what that's happened. You can see price took out the inducement and broke past this one here. You can clearly see price reversed. So this means that we are currently in a new trading range, and price, after price broke the structure, it created this first pullback. This one here is not a valid pullback. You can clearly see that this one here is not a valid pullback. So price created another valid pullback here. So that liquidity resting below that valid pullback is what we call the the inducement. And so that's the inducement. So this means that once the inducement is taken out, we say that's the right moment to mark the POIs. And we said if marking the POIs, we start with the order flows and not the order blocks. We need to make sure that all the order flows are mitigated in the range before we can think of using the order blocks. So right here, I can clearly see that, all right, in this case, I only marked the decisional order flow, but let's mark like the whole trading range, the POIs and stuff. All right, let me mute my phone. I can see some messages like giving me some notification sounds like crazy. All right, so right here we can clearly see. All right, then I need to zoom so that you guys can see like the screen and all of that. So again, a zoom here so that you see that this here is a break. So exactly right here, I can clearly see where I'm placing the line. So that's the line exactly right there. So now that gives me yeah, now if I do that and I take my rectangle and I say that this one here was a order flow, I think now I'll be like you all will be agreeing with me because this here was a valid pullback. But then we can clearly see that price reversed back and wicked all the way, filling the whole order flow. So that's a valid mitigation because this here was a valid pullback. And so right here you can see the mitigation. So that's now what we call the extreme order flow. So that's our extreme order flow. And we said that a mitigation of the order flow by an invalid pullback is not a valid mitigation. So this one here was an invalid pullback, so this was not a valid mitigation. And then right here price created another one, and you can see I choose that, or I marked that as an order flow too, because it was truly an order flow. And the same, just like I said, a mitigation by an invalid pullback is not a valid mitigation. So right here we can clearly see that this mitigation, I mean this pullback, is not valid. It's an invalid pullback, and so in that case this mitigation is not considered to be valid. It is considered to be invalid. So this means that our decisional POI or our decisional order flow is still valid. Right, so in that case, then where is our engineering liquidity? So the most important thing is obviously marking the extreme POI while identifying the engineering liquidity. This was just some additional knowledge so that I can like say the mitigation thing of a valid pullback and stuff. But just after marking the extreme POI, you can identify your engineering liquidity. I said the engineering liquidity is the liquidity resting on the valid, I mean below the valid pullback right before the extreme POI. This is the extreme POI and it's an order flow in that case. So the valid pullback that is right before this extreme order flow is this one here. And so we mark a line on that low of that valid pullback, and then the sell side liquidity resting below here. That's what we call the engineering liquidity. And you can clearly see that this candle came all the way towards taking that external liquidity, and you can clearly see price is actually, you can see this rejection, like a hair big rejection. And I said that the engineering liquidity, just like the inducement, is a core liquidity. And if price sweeps or grabs that engineering liquidity, even without mitigating the extreme PY, it can still give that ultimate reversal. So this means that there is a good possibility that price will not this means that there is a good possibility that price will not come back all the way mitigating our extreme PY, rather reverse back and break past our external liquidity. So what do we check here after price has swept the liquidity? What you check obviously is the reversal patterns, and that's what will give you the signal to take the trade. And in this case, now you cannot take the trade, of course, even though this here is what we call the pin bar. You cannot take the trade because it will not give you a reasonable risk to reward. Because obviously, if you take the trade, your entry will be somewhere there, and obviously, a safer stop loss is on that low. And then if we target like this high, you can clearly see that this will not give you a reasonable risk to reward. You can see it's less than even 1:1. So in this case, we usually just ignore this kind of trades, or this is where now the lower time frame execution come into play. So that's the reason as to why learning the top-down analysis is it's advised and great, even though it's not a must to learn it, because you can still be profitable based on one time frame. But learning it is also good, yeah, you know. And then now, yeah, this is just some example, and yeah, let me get into some other example here on USDJPY. All right, so USDJPY taking some long hours here. Yeah, probably on the daily time frame. You can clearly see this. Right, so you can clearly see that you guys can see my screen here, and it can just say all by itself. You can see the inducement taken out, then that's a swing point, price reversed, broke past our swing point, confirming a bullish break of structure, Then right here, instead of price now reacting to our POI and make that break past this swing point, price rather did the opposite and broke past our trading range low with a full or with a big displacement. And in that case, this here is a strong break. That means that a change of character with no doubt. And yeah, price later created a valid pullback and again another valid pullback. So this one here is our inducement, because right after price broke the structure to the downside, that means that we changed bias, or we shifted bias from being bullish to now being bearish. So this means this here will be our impulsive move or our trading range. So the inducement was taken out, and after that we all know that the next step is usually marking the order flows. And right here, let me zoom so that you can see why exactly I marked this here as an order flow. So the extreme order flow, this one here, but you can clearly see it was mitigated. The reason is why I'm saying that is because you can see that this candle, then this is a valid pullback. So price like opened here, then closed all the way here, and then went all the way down and then back reversing, closing past here. So this here was a valid pullback, and then price you can see broke below it. Again, a valid pullback mitigating the zone, then the rally down, creating now this order flow that is now not mitigated. So in that case, this means that that's now our extreme order flow. So without even going further, we can just identify our engineering liquidity, because this is an order flow, and I say that an order flow is primary. So even like let's say now all the order flows we are mitigated, this means now our trading range will only have the order blocks, or the secondary option, which is now the order blocks, will only be valid in that case. So that's when now we use the order blocks in identifying the engineering liquidity, because the order flows are all dead, or let's say they're all invalid, and we just ignore them, and the only POIs that we consider are the order blocks. So identify your extreme order block, and then the pullback right before that extreme order block. It doesn't matter if it's a pullback high, or it doesn't matter if it's a buy side liquidity or sell side liquidity. That's the engineering liquidity. It just depends on the structure. All right, so exactly right here, you can clearly see that's the extreme order flow, and this is the pullback that is right before this extreme order flow. And so this buy side liquidity is what we call the engineering liquidity. So this here is just some additional knowledge. You can see right here, this here was the inducement, and this one here is also an order flow. Yeah, this one, starting from that low all the way to that high, that's an order flow, but we can clearly see it's mitigated exactly here with the pullback that created our inducement. So if it's created, then this means that this here is the order flow that stays unmitigated. And also you can clearly see there is also this order flow, but this order flow is mitigated, and you can clearly see another order flow here which is not mitigated. So right here guys, I want you to take note of this. You can clearly see price gave a reaction from this order flow, in fact a good reaction to the downside. And so most sellers here were tricked, and we are lured to sell, even though this here was not a valid order flow. We said in a trading range there can only be a maximum of 2 valid order flows. So in this case, and I literally say that in a trading range, it's not strictly that it will have like those 2 order flows, so that you can say this is the extreme and this is the decisional. Sometimes price may create more than 2 unmitigated order flows in a trading range, and you'll be like, which now is the decisional and which one is the extreme? So in this case, we said the extreme, it's easy to identify. You just find the one that is unmitigated, and it is on the extreme of the trading range. Of course, this one is the one that is on the extreme of the trading range, and you can clearly see it's unmitigated. So this means that's the extreme PY with no doubt. So right here, if I am to pick the the decisional now, this is where now people like go wrong. You can see this order flow is mitigated. We said that we don't pick this one here as the order flow. Like you guys need to note that we don't pick this one here as the order flow. We pick the whole buying move from this. Even though I know like this one here is a valid pullback. I mean, if I take a path, you can clearly see that if I do this, you can see this says a valid pullback exactly right here, but I am not taking this one here. I mean this short pullback as the, not unless I just want to refine that order flow, of which you can, but you should put in mind that that's not the order flow. The order flow is actually the whole buying move from this low all the way to that high, and you can clearly see it was mitigated here by this pullback that created our major inducement. All right, anyway, let's not put much interest in this because it's already mitigated. So let's get to the unmitigated ones. You can see this here is unmitigated, and this is now the unmitigated POI or the unmitigated order flow that is right after the inducement is taken out, because this here was mitigated and this one here is the one that is unmitigated, and it is right after our major inducement. And they say that the decisional POI, it's the one that is right after. It doesn't matter if it's an order flow or an order block, because sometimes in a trading range you may find like multiple order blocks and you may be like, which now is the decisional POI, which now is the decisional order block. So in that case, now just check on the order block, or in this case, since it's an order flow, just check on the order flow that is right after the inducement. And we can clearly see this here is the one that is valid. Why valid? Because it's unmitigated. This here is mitigated. We said we ignore that. So this one here is unmitigated and it is right after the inducement. So right here, this here was the correct movement to the downside. Probably on the lower time frame, this wouldn't give like a good reaction. So if you are using the direct entry, I know your entry will be after this evening star, and of course you will place your SL above this whatever, and of course your target profit on the external liquidity. We talked about this on the yesterday's session, using the reversal patterns once price has mitigated the range. And you can clearly see that in this case you will be stopped out. We said the decisional PY is 50-50, so there's no doubt in that. So once you get stopped out, the only part that you'll be looking forward to take the reversal from is obviously from the engineering liquidity sweep. So that's the one that you'll be looking forward. And if this sweep fails, now that's when now you will be waiting for the extreme PY to be mitigated. But now that's the lesson for tomorrow. We'll be diving into that on tomorrow's session. So you can see this here was a good reversal pattern. That was a evening star pattern showcasing a strong reversal to the downside. So guys, this is what I wanted to say. Like this order flow, you can see this order flow is in between the extreme order flow and the decisional order flow. This order flow is what we call the SMT. It's there to lure the early sellers, or it's there to lure the obviously the sellers that they just mark a POI, and when they see a reaction, they just react as long as there is a reaction. You can clearly see on this, after mitigation of this SMT, here we call SMT in short, or in abbreviation we just call it SMT, in full smart money trap. So you can see price created a beautiful pattern there, a bearish engulfing pattern. Imagine right after like mitigating this, like once price just mitigated that zone, it gave a good rejection with a good reversal pattern there. That's a bearish engulfing pattern. So obviously a direct entry trader will obviously do that. A sell, of course, it's worth it to place it above the order flow, and of course we'll be targeting the opposite external liquidity. Now in this case you can see stopped out again. So he was stopped out on the first decisional POI, which this year was a valid stopped out, but now the second one was not a valid stopped out. So yeah, that's something you need to take note. There can only be a maximum of 2 valid POIs in a trading range. All right, so anyway, that was just some additional knowledge. We are into the engineering liquidity. So this one is the engineering liquidity, obviously, because this one here is the extreme PY, and you can clearly see this is a valid pullback. So that's a keyword. Make sure that you're marking on a valid pullback. Then we can clearly see price swept that I'll grab this engineering liquidity. You can clearly see if I zoom in, you can see like this candle just wicked above this here, even though it didn't like dipped, like it didn't go deep, it just wicked above, like small wick above, and then give the rejection. That was enough to confirm the sweep, and we can clearly see the reversal pattern that price created was a shooting star or an inverted hammer, but it was not a perfect inverted hammer because you can clearly see that this body was big and there was some small candle here, I mean small shadow, and a long shadow that now made me to say that that was a shooting star or an inverted hammer. So it's not a perfect inverted hammer because of the characteristics that I said. You can see the long wick here, even though not longer than this rejection, and also you can see the body size is also somehow big. So in this case, I will just wait for another like not another but a strong bearish rejection. I mean a strong bearish candle that will give me like a strong momentum. Probably I will get the courage to enter into this trade exactly right here. So you can see after that big body bearish candle, that's where I will get the energy and then place my stop loss, of course, at this sweeping candle. And yeah, of course, we'll be targeting the external liquidity. So we'll be going all the way towards our external liquidity here. Yeah, and you can clearly see the risk to reward is good, luckily in this case. So price is yet to TP. I mean, price is yet to full TP. You can see price is now consolidating here after mitigating this rejection block. But this rejection block is not supposed to hold or to push price all the way breaking past breaking past this trading range high. So it's supposed to just give some rejection and then later price just continue down and down. Or since there is still this POI, you may never know, price may make that move all the way to this extreme POI and now make the reversal now back to breaking past this one here. But we'll be talking about the extreme POI tomorrow, but the concept you have already grasped that concept. And by the way, explore more of these reversal patterns. Yeah, know more about these reversal patterns. I said the name does not matter, but at least get to know the narrative of these reversal patterns. Get to know what they actually showcase about the strength of the buyers and sellers in the price and more of that. So you can see like the one that I circled here, that was a bearish engulfing against, yeah, a very perfect bearish engulfing. You can see this was a bullish candle, and then this bearish candle engulfed that bullish momentum, and price, you can see after that price just spiked down. So that's where now the support and resistance traders come in play, where they mark this support that later became this support that later became resistance, and then price reversed back again, you can see, to that support level. And then once they see this bearish engulfing, that's when they take the entry and they keep holding until they get another support. And yeah, all strategies do work. You just need to know, just need to back test and more yeah, get all the knowledge about it, get to know where to enter, where to exit, and all of that. So I'm not I'll not say that support and resistance does not work, or I'll not say that trend lines does not work. Even though it didn't work for me, I know traders who are profitable with them. All right, so guys, I think this session was enough. I think, yeah, I think the session I'll just end the session here, and I believe I have explained it good. And tomorrow we'll be diving into the final entry module based on direct entries, based on reversal patterns. Then after that, I will be covering now the reversal patterns. Then probably now I think we'll now be getting into the lower time frame execution and stuff. Yeah, I don't know. I will check the bootcamp curriculum. So yeah, I am now ready for the questions.